Market volatility during these dog days of summer doesn't seem to have curbed investor interest in stocks, nor has any uncertainty around the economic outlook. Then comes this year's Jackson Hole Symposium. There's certainly a lot to talk about with our chief equity strategist and economist, John Blank. John, what will the direction of stocks be dictated by over the near term?
Yeah, Terry. So we got a 65 print in the VIX back on August the 5th when the whole temper tantrum in the markets took place around the Japanese yen carry trade. And now we're back to close to 16 or 17. So before that temper tantrum, we were down in the 15, 12 area. So in general, it's more likely that the volatility continues to fall and uncertainty falls with it for the next few weeks, and that will be bullish stocks generally.
And what role is macroeconomic data going to play in this?
Well, at this current moment in time, the Q3 GDP from the GDP Now Atlanta Fed is 2% for the third quarter of this year. That is actually what the Fed would like to see, which is trend growth rate in the U.S. economy, not too hot, not too slow. So that is actually a soft landing perspective. If the August jobs numbers come in, 150, 160, 170-ish, that would be the ideal place for the Fed to cut rates in September, 25 basis points. If we get a real bad jobs number in August, they'll cut 50.
Might we see conflicting economic data points coming out in the months ahead?
Oh, absolutely. There's no question that there is a live ammunition meeting in September, Terry. All the different regional feds and voting members will come with their regional assessment of what to do about monetary policy, and they will hammer it out with Chair Powell. So I think the market is far too aggressive in trying to see what's going to happen, and I think the market should actually realize that there'll be a real debate at this meeting, and they'll make a decision at that meeting.
Aside from interest rates, how might the upcoming August jobs report due out in early September be impactful to the markets?
Well, two ways, Terry. One is they will get the revisions on July that spooked the market. There was a 113 print in July, but there was worries about the hurricane effects in that number. So we'll get a hard look at the July revisions. And then, of course, we'll get the unrevised August data, which will also give the market another set of evidence about whether cooling is being handled in a gradual and sustainable way or whether we've got something more significant at hand.
I hate to keep bringing this up, but has anything changed for the better regarding the Treasury's persistent inverted yield curve?
The inverted yield curve, has been in place for the longest period, I think, in post-war history, Terry. So the basic point of that is the smart money was dead wrong for the last 2.5 years, and so why should we call it smart money anymore?
Yeah, it makes sense. What else remains worrisome for the economy as far as you can tell?
Well, the main issue is, do we get a orderly slowdown in the labor market or do we get a disorderly slowdown? And that is where the debate is a soft landing, because if you have, the type of job openings we have, which are significantly higher still, and people can find new jobs even after layoffs happen, which seems to be the case in the latest unemployment claims data, then we can attain a soft landing. And so it really all depends on whether we can get an orderly calming of the labor market while still keeping enough heat on to get people new jobs, or whether we get some type of event that cascades and multiplies.
Overall, what do you see for the U.S. economy here in the second half, especially when it comes to inflation?
I think we're going to be in the low twos on inflation. Not 2.8 to 2.6. I don't know if we'll get below that, but we'll get towards a place where the Fed will be a little more comfortable. And we're getting the GDP growth numbers in real terms at 2.5, and that's in many ways exactly where the Fed likes things. So let's hope we get that, Jerry.
Does this annual Jackson Hole gathering produce any market-moving news as it used to way back in years past?
I don't think so. I mean, we've spoken about this before. The topic of the meeting is reassessing the effectiveness and transmission of monetary policy. So expect that Chair Powell will absolutely address just that topic tomorrow, Friday, August 23rd. And just getting that topic, assessed by the Federal Reserve Chair and all the read-throughs that happen from the media behind us will probably get the market to pick up a little bit. Markets don't necessarily think he's going to say anything, but they don't want him to surprise them either.
In the large cap strong buy stock category, you've been focused on Nomura Research Institute, Manhattan Associates, and Exact Sciences.
Yeah, Nomura Research Institute, of course, is a Japanese stock, ticker NRILY. I've got a target price of 38, and it's 33 now, Terry. After the yen carry trade, you've got an entry position for a lot of stocks like this that are pretty solid. So take a look at Nomura. It's the number one ranked stock right now. I've got Manhattan Associates, ticker MANH. You may not have heard of this stock, but it's a growth score of B and a Zacks rank number one. It is in a top-ranking industry, computer software, and what it is it provides supply chain execution and optimization solutions globally through, basically computer software. So net margin, Terry, of 20%, which is, that the S&P 500 is 12. So this stock has been on a tear for some time. Estimate revisions up 9% this year and 7% next year. So you can, if you want to look for a momentum trading stock, this is a really nice stock to look into. The last one I've got for you today is Exact Sciences, ticker EXAS. A growth score of A and a Zacks number 2 rank, and this stock doesn't make money, but it's in a molecular diagnostics company looking for the early detection and prevention of some of the deadliest forms of cancer. So if you can actually use some of these molecular diagnostics to early detection of cancer, this could be a hugely profitable company. And they are looking, next year they're looking just to break even, but that's an upside revision from where they were even a few months ago. So there is something brewing Exact Sciences, and you've got a target price of 64, and we're trading it, about 60 now, Terry. And back in 2021, this was a $150 stock. So keep an eye on Exact Sciences for some news about their cancer products.
Our chief equity strategist and economist John Blank on the current economic picture with John. I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.